The fellas, come back. We don't want your New World Order, you know? Leave Chile right now. Leave Chile. You are not... You're killing a lot of people. You're killing a lot of people. Leave here. Leave Chile right now. Leave Chile. Leave Chile. We don't want your world government. Leave Chile right now. Leave Chile, okay? Leave Chile. Your family is the most disgusting in the world, you know? Leave here. Leave. You're a traitor to Chile. Mr. Agustino, you're a traitor to Chile, okay? You're a traitor to Chile. What you're doing right now, okay? 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 You know everything. You know everything. You're participating with him. You're participating with him in this. Your world government will fail, okay? It will fail! Your world government will fail! Will fail! Will fail! You know it! Leave Chile right now! We don't want you here! We don't want your disgusting thing here! Leave Chile now!
And Obama's new chief of staff, William Daley, JP Morgan vice chairman, lobbied against financial reform, foe of healthcare bill, opposed Consumer Protection Bureau. He apparently was against it when Timothy Geithner called him to basically lobby JP Morgan for support of the Consumer Protection Bureau. He said at the time that he believed that there were sufficient consumer safeguards already on the books.
Yeah, well, he's a stone-cold liar. And he's obviously part of the same ghetto economics of getting America into as much debt as possible so that they become indentured servants, answering only to their slave masters on Wall Street who are shilling and slopping and slinging. They're debt slingers, not unlike the crack dealers. But we already know that. What I want to know is, how does Obama get up in the morning and look at himself in the mirror and not cry in embarrassment and shame? As an American myself, I am deeply embarrassed by this idiot who's totally in the service of the bankers.
Hello everyone, welcome to Global Government News. Today is Thursday, January 20th, 2011, and I'm Darko. New listeners, please visit my website, www.ggnonline.com. That's ggnonline.com. I post all my videos there, along with some polls and some personal information about me, and then you'll find other information about weather modification and the economic collapse and civil unrest that will ensue thereafter. So I have a lot of news to cover as far as the economy goes today. We're going to start off with commodities. We had crude oil trading at $90.08 a barrel, and natural gas at $4.55. All of these were down. Gasoline at $2.48. Gold was at $13.67. It was down $2.90. Silver trading at $28.66. And it was down, what was that, about 13 cents. Palladium has been higher lately, but it was down almost $10 today. If you look down here, you can see that the prices for soybeans and corn, cotton, and ethanol were all up, and wheat was down. Of course, that's not going to stay like that. Wheat will go up in the next year. You can probably be guaranteed of that. I don't say probably guaranteed. You are guaranteed that wheat prices will go up, probably to almost 1,000, and just because of all the food shortages that are going on. Moving on, world U.S. $100. Weird the way they worded that. World oil prices rose slightly on Tuesday as the IEA warned that crude near $100, posing a real risk to the global economic recovery. Brent North Sea crude for delivery in March rose 59 cents to $98.02 a barrel in late afternoon, London trade said. And this is actually some positive news that I can leave you with, with this the plethora of bad news that may be included in these news reports. Well, it's just what's going on. So I'm sorry about that, but I do have some good news, and this is that OPEC has been secretly, quietly increasing its oil output. And if you don't know how the whole, I guess you could say the whole scam works, basically I covered this individual analysis, an economic analysis recently in about the past week, and he was talking about how OPEC wasn't planning on meeting until July as far as what they were going to do in regards to output, how much they were going to start, producing. And so he said basically that since they weren't going to meet until July, it meant that they weren't going to start increasing their output until July. So we would have to stick it out this winter and into the spring with the prices that we have, with the supply that we have, which of course is not going to be enough with this brutal winter. And so that's why oil prices have been higher. But it says the International Energy Agency says some members of the Organization of Petroleum Exporting Countries, OPEC, are quietly increasing their outputs. It said the IEA says OPEC members such as Saudi Arabia are unobtrusively raising their output in order to control the rise in global oil prices. Next up is oil drops a third day as China inflation concerns signals demand may slow. Oil fell for a third day as Chinese economic data fanned speculation the world's biggest energy user will take more steps to stop overheating and slowing fuel demand. And see, they always give reasons for why. It says as oil fell for a third day as if there's some kind of strong correlation. Well, there may be a strong correlation, but I think there's a stronger correlation with information like this, right? If they're increasing the output and they're not talking about it, that's kind of like not insider trading information, but it's basically if they're going to increase the output, that means that there's going to be a bigger supply. Prices should be able to go down, and it may have nothing to do with China and that. But look, moving on here to copper shortage. Copper shortage to be worse since 2004 amid economic recovery. Camus says copper demand will outstrip supply for the next 2 years as the economy recovers, China sustains consumption, and mine output drops, Japan's top producers said. And I covered this recently, so just more news on copper and the shortages that will follow. So if you have your pennies, you might want to hold on to them, especially since they're going to possibly just remove them from the currency that's out there right now. Says Asian stocks off 2-month high on U.S. earnings. Asian stocks retreated from 2-month peaks on Thursday due to disappointing earnings from Wall Street majors, while the euro gave in to some profit-taking after extending its rally overnight to an 8-week high. And next we have China's stocks declined for the first time in 3 days on inflation outlook. China's stocks fell for the first time in 3 days on concern for faster than estimated economic growth that will spur a rebound in inflation, increasing pressure on the government to raise interest rates. And next up is China's economic growth accelerates, adding to rate pressure. China's growth accelerated to 9.8%, and on the People's Daily online, it's reporting 10%. So I figured it's probably about 10% right now. If you take, if you just put those two numbers together, either way, it's an increase. In the fourth quarter, as industrial production and retail sales picked up, adding pressure on policymakers to keep raising interest rates. And a lot of news from Bloomberg today. U.S. stocks retreat as S&P 500 index posts biggest decline since November. U.S. stocks fell, driving the S&P 500 index to its biggest drop since November after Goldman Sachs Incorporated failed to beat profit estimates and housing starts slid more than forecasted. Dollar rises as stocks drop, speculation increases, China will cool growth. The dollar rose against the euro, snapping a 3-day drop as the decline in Asian stocks and speculation China will take more measures to cool growth boosted demand for the greenback as a refuge. Dollar rises on falling stocks, speculation, same thing. Global bond growth, so we're getting the bonds here. The global bond growth rate decelerates to pre-crisis levels. Credit markets, the global bond market's expansion is slowing for the first time since 2005 as governments withdraw stimulus and credit conditions improve. The bond market grew 9.9% last year to $49.7 trillion, down from an 18.5% rise in 2009 when government provided debt guarantees during the worst financial crisis since the Great Depression. According to Bank of America Merrill Lynch, the 10-year cumulative annual growth rate is 9.8%. The euro is up on upbeat sentiment. Global stocks rise. Manufacturing, U.S. factories buck declines. A sector creating more jobs and it's cutting, says a shining star. And this is a little off path, but if you've listened to my other videos, you know that I like symbolism, and I like to point out symbolism that has to do with Freemasons, basically, the little hidden symbols, I guess you could say. There's basically it goes off the Tarot, and then it goes off the Cabal. And so basically, if you Arby's right here, if you look at this, what you're really looking at is RB. The A and the Y is actually redundant. The real thing is the RB. The RB The R stands for the sun, and the B supposedly stands for the magician. And let me just call it. You can see now in Arby's, most of their stores now, replaced their windows with that diamond. I think it's called an octahedron, but it's basically a two-sided pyramid, and that's why their window has that. So a lot of little hidden stuff you can look at, and that was from the Freeman perspective. Freeman, he's the one that helped me with that information. But it says U.S. manufacturing, viewed as a lost cause by many Americans, has begun creating more jobs than it eliminates for the first time in more than a decade. Confidence among U.S. home builders stagnates on lack of credit for buyers. Confidence among U.S. home builders stagnated in January, reflecting a lack of credit that threatens to hold back construction this year. And then home construction declines. New home construction dropped in December to its lowest level in more than a year as feeble housing sector ended 2010 on a weak note. It said private building of new homes dropped 4.3% in December from a month earlier to a seasonally adjusted annual rate of 529,000. And moving on, said the construction industry continued to stumble last year, even as economic growth picked up and private sector job creation returned. Housing starts ended the year 8.2% below December 2009, and there's little sign, says here, building will pick up early this year. So that's straight from the Wall Street Journal. Next up, U.S. home building at 50-year low. The U.S. Department of Commerce has announced that the rate of construction of new homes in the country has fallen to its lowest levels in 50 years. So we're going to keep moving here, and we have home building sales probably languish as market lagged behind recovery. Home building probably dropped in December, and sales of existing homes struggle to rebound from a post-tax credit slump. And talking about the government little tax incentive that they gave for about, what was it, a 3-month or 6-month period. It was very short. It was cut off in the spring of last year, reflecting a market trying to regain its footing more than a year into the economic recovery, economists said before this week's report. Rate rises are coming. Households should prepare. Inflation is back. There's no denying it now. Prices rose 3.7% last month, well above the consensus forecast of 3.4% and higher, even than the Bank of England's prediction of a 3.6% peak in the coming months. So, and then they got that value-added tax increase over there in the UK as well, so I'm sure that's helping. Not housing prices to hit bottom this spring, says economists. U.S. housing prices overall are expected to hit bottom by spring 2011 and begin a gradual rise in 2012. Frank Nowak, chief economist and vice president of housing lender Freddie Mac, said on Wednesday. Home prices drops exceed Great Depression, says Zillow. Home prices fell for the 53rd consecutive month in November, taking the decline past that of the Great Depression for the first time in the prolonged housing slump, according to Zillow. Home prices have fallen 26% since their peak in 2006, exceeding the 25.9% drop registered in the 5 years between 1928 and 1933, the housing data company said in a report on Monday. And let's see what we have next. Confidence. Actually, I think we already covered that. Get ready for another housing crash. It says here the best evidence that we're headed for the double dip in housing is the quality of the mortgages during the recent period in which the housing market seemed to improve in many areas. And just read this one paragraph here. In the Freddie Mac review of Citigroup's performing loans that I mentioned earlier today, the portion rated as, quote, not acceptable quality was as high as 32% in the fourth quarter of 2009. While this has obvious implications for the repurchase of or putback liability of Citigroup, it also has broader implications for the housing market and the economy. Defaults by cities looming as U.S. mayors say deficits hinder debt payment. The mayors of L.A. and Chicago said the financial strains are still weighing on the local governments in wake of the recession and may cause cities to default on their bonds. So that's not good news. And we're going to finish up when we come back the 22 painful signs that austerity has arrived in America. And if you want to see the first one, we have the financial manager of Detroit Public Schools wants to close half of all city schools, leading class sizes up to 62 students. And in Detroit, I believe their unemployment has hit 50%. And they're not doing too well in Detroit. They're having some really hard times. But please join us in part 2 of this economic news bulletin. This is GGN, and I'm Darko. Thank you.